But I used to trade a lot. I used to leverage, buy, sell, and
you lost a lot of money also, I'm sure.
I lost every penny that I made in
2008.
In
We'll come to that.
So every penny that I made, I lost it. So one thing that I learned from that experience, that you may be the best in stock market. It's not what you make in life. It's what you can retain and, take home.
Hey guys, I'm happy to be a part of Zerodha's media network. Together, Zerodha and I plan to bring to you simple yet effective and impactful news and views from the best minds in the financial world. Hello and welcome to the Money Mindset. Now, when I was doing a lot of research on who are the guests I should feature on the show, I asked a lot of you who you would want me to get on the show. And one of the most popular requests was to get Amit Jeswani of Stallion Asset. He is someone who not just has a very, very fun personality, but has been one of the best performing PMSs in the last, say, 3 to about 5 year period. So I have him here with me. Amit, thank you so much for joining us in the show.
Thank you, Sonia. Thank you, Sonia, for inviting me to this show. This is the first podcast I'm doing after 7 years. I hope this is a good one.
I hope so. Why haven't you done too many interviews?
No, like I do TV interviews. I started with, I had stopped doing TV interviews after 2018. And one day Udyan called me. And I've grown up looking at Udyan. Like throughout, when I was baby, when I was a kid, I used to see Udyan and get, and that was the first time I came back in TV in 2022, end of 22. And I've grown up looking at you also.
No, don't say that.
No, of course, you're not very old.
I feel very old.
But, and when I got a call from you, I just couldn't say no. So that is why.
That's so sweet. That's history of you. But you know what? It's very interesting because I've been on TV for the last 15, 16 years, and we've interviewed a lot of the old guard, so to speak, right? Now, in the new age fund managers or PMS managers, your name always comes up. And I must tell our viewers that it is because of the fabulous performance that your fund has done. I was just going through the Stallion fund. You've had a return of 70% in the last 1 year, while the benchmark has given a return of 30%. No, 20.
Like
15,
Nifty
20%.
500 is 15%, Nifty is 9%. So our alphas would be around 55% this year.
And your fund has given a return of 70%.
This year, yes. Net of fees, pre-fees would be like higher at 75.
So what's your secret sauce?
Secret sauce. I wish there was one. So we take 4 decisions: what to buy, when to buy, how much to buy, and when to sell. Every stock market guy makes these 4 decisions: what to buy, when to buy, how much to buy, and when to sell. And we as fund managers get paid to make those decisions for someone else. And we try to improve ourselves every day on these 4 decisions. And that is all we do. We are growth investors. We buy top 20, 25 executors. See, in India, I'll tell you one thing for sure. In India, opportunity in every industry is mouth-watering. Execution is eye-watering. Only few entrepreneurs know how to execute. We create a team of 20, 25 players or stocks which are executing. They're scaling at 25, 30%, 40%, 50%. These are monopolies. We don't buy the 10th best company in any industry, the best guy in the industry. And we hold them till the time they're executing and doing well. But while we have 25 players in our team, we also have 20, 25 players in the dressing room. So if any of our promoters doesn't execute, we replace that promoter with our dressing room promoters who are trying hard to get in my playing 25. So the promoters need to keep executing. If they keep executing, they'll be part of our portfolio. If they don't execute, they'll get, we fire them basically. So that is what we keep doing again and again. Every quarter, we keep tracking data. We divide India in 71 industries. This is broadly what we do. We divide India in 71 industries. We keep tracking in every industry who are the guys who are gaining market share, who are the guys who are losing market share. Every 90 days, we come to know, see, this is the best part in our industry. If anyone has to go from, let's say, 100 crore profit to 500 crore profit, it will have to be gradual, right? So you get in at 120 crore, 140 crore, 180 crores, you still will get there. You will know that these are the guys who are the ones who are scaling, and the other guys are not. So this is what we keep doing. We have executors, and being in executors manages your risk as well. So returns are one side of the game, Sonia, because I'm just starting. So I'll just tell you in the risk side, because a lot of wealth managers and a lot of people do a lot of due diligence on us.
Correct.
On risk side, how do you see risk? So 6 years our CAGR has been around 34% plus net of fees. 6 years plus since inception of Stallion Asset Core Fund. Our portfolio beta against Nifty 500, BSE 500 TRI has been 0.86. Against Nifty 50, our portfolio beta has been 0.8. Our standard deviation is 20% lower than Nifty 50. So while our returns are outstanding, our risk is still lowest in the industry among everyone. Our large cap plus cash, and large cap today is near 1 lakh crore. The top 100 companies large cap, next 150 is mid cap, anything else. Our small cap exposure for last 6 years, 6+ years, about 74, has been around 18%. So it's not like we are a small cap fund. We've never done B2G in our entire. So it's not like we have government stocks and made money from government stocks. So we've done every factor. Like example, if our pre-fees returns are around 700%, and this is what all these, I would say the foreigners or Firangs and all these guys look at this data, which I'm going to take, that if our we are great risk managers. For me, I was a trader before I became an investor.
Oh, really? I wanted to, in fact, ask you about your story because you said that you've grown up watching all of us. So you're clearly very young, but you're at this young age, you're like, your fund is performing exceptionally well. So tell us a little bit about your journey. When did you start investing? How did you save?
We were in a textile business till 2003, and my father separated from his brothers. I was only 14 years old in 2004. My brother was 12 years old. So my father said that I can't do this. I have old stocks. I just rather for time pass. He invested all his money in real estate and stocks, etc. Because we were running a textile mill, and you can't run a textile mill alone.
So there was no exposure to the stock markets at that time?
No, my family had zero exposure, and we became only small sub-brokers of angel broking. And that is how, but there was only one problem. My father was a sub-broker, but he didn't know how to run computers. So I used to go to help him run computers. And that time, I learned the broking business, how the markets work. Over the next 3 years, the broking business kept growing for us. And we did, like, that time what used to happen, Sonia, there used to be one dealer who used to punch the trades, and 4-5 people would be like behind them, just saying buy 100 shares, sell 100 shares, whatever, uncles basically. What we did, we came with a Falcon. There was this software called Falcon, which was like a technical analysis software. And that time E-Trade had started. And what we used to do is, like, we gave 40 people in the office, 40 different clients, terminals to trade. And terminals that they can do their own buying, selling, and we gave everyone a free Falcon. And that time Falcon would cost around 25,000. And that is how I learned technical analysis. It's not like, but I used to trade a lot. I used to leverage, buy, sell, and
you lost a lot of money also, I'm sure.
I made first. So initially I used to learn. So I used to learn from, so we used to take research services from everyone who came from CNBC. And we used to give it for free to everyone, like Ashwani Gujral. Okay. That time he was a superstar. And he used to have long short calls. Like I will either be long Nifty or short Nifty. And we had a massive TV only forecasting his call. This was so different. Those days were so different.
Those days were really different.
And these traders would go boom, boom, boom.
The minute Ashwini would say something.
Short. And so he had this paid.
And people would really follow every word of what he said.
Absolutely. That time the craze was because CNBC was the only channel. You didn't have 8 channels. You didn't have Hindi channels. Nothing. You had one channel, 2-3 guys. I think so. The Sukhani would come, and you had again that time. In fact, Gul and Tulsian show would be there, and everyone would be glued to the markets. Like for us, of course, we were brokers, but that is how I started. And in fact, 2003, 2004, 5, 6, 7, the markets were one side, Sonia. You saw Sensex going from 3,000 to 21,000. And when you're a young guy, I was probably 17, 16, a guy who was studying in Mithibai, chilling in MMK. Because my friends were in MMK, I was in Mithibai, whatever. I remember that. But that is how, for us, and those kind of money we never even seen. But that initial money making, you do trade futures, those Ispat kind of stocks which went up multiple times.
So which was your best trade?
I
Your
made a lot of
first,
money in Jet
big trade.
Corporation, RNRL. Those were like,
Yeah.
those RNRL went from 30 to 260 or 70 in that 6-month period. And the lot sizes were so large that if you got it right, even 10, 20 points, you would be extremely rich. And from that point of, in those days, 10 lakhs today is not the same that it was a few years, like 15 years ago or 17 years ago. So we did extremely well. But I lost every penny that I made in 2008.
I was going to come to that.
So every penny that I made, I lost it. So there used to be margin calls, and of course my margin call. But that is how you learn risk management. And I had gone to UK for my studies, Sonia, in 2000. Like I was a part of this Kingston University in London. So while I was very sad to go there because I had to lose the markets to go there, but when I went there, I in fact got lucky because I could see then the global markets, and that time all banks were bankrupt in the UK.
So this was in 2008.
2008, yeah. So it was a very tough time, but okay, we
So then you
survived.
lost all your money there.
I was a
And then
poor
you
kid
started
from a
afresh.
rich kid. I became a poor kid, and it's all happened so fast. Like I didn't even realize that I'd become rich. Before I realized that I'd become rich, I'd become poor again. So I couldn't even tell someone that I'd become rich and then poor, because I was probably the only student who could pay my tuition fees on my own. Like tuition fees would be 10,000 pounds, etc. But yeah, so that was my initial. But I learned risk management, and then 2009, Sonia, I couldn't press the button. Like as soon as I bought a stock at 100 rupees, how do you make money? By riding your winners.
Yeah.
My brain's frame had become so bad because psychologically I was
There was fear.
destroyed.
There was a lot of fear.
Yeah. So as soon as I would buy a stock at 100 rupees, 120, 30, I would, like sell my position. Like, bus, stop profit was the rule, because I couldn't, like, psychologically, I became like a very bad trader.
So, I want to pause there. That's interesting. The market is all about greed and fear, right? Now, in 2008, of course, fear was an emotion that gripped you and you lost a lot of money and all of that. How do you overcome that?
No, over time, again, with processes, I didn't understand fundamentals. There was no thing as annual reports on bse.com. There was no screener.com. There was no thing. I was just tracking technicals. And we used to have monthly, weekly sessions of technical analysis. There were guys, then I was in London. I was only focused. I used to read every book that I can on
technicals.
markets, yeah, technicals, fundamentals. By education, I'm a CFA and a CMT. So I'm a double charter. Not that a lot of people know that, but I did everything possible. I have read every book that I could. Of course, I couldn't afford to buy the original one, so I would have like the Xerox ones initially. But I have read every possible, because when you lose money, you also, it's very depressing, but I
Why were you sitting with a CFA and these degrees and you're still trading and using the
No, CFA I became later.
Okay.
I became in 2000, I think CFA I finished in 2012, and 2013 I finished my CMT. So it was later that I didn't even know CFA existed that time. I was a 18-year-old boy, no understanding, speculator, wanted to make it large in life. But that initial learnings, Sonia, made me understand risk management. And touch wood, it's been after that. I don't know, but I fundamentally believe, for me, risk is everything. And then I was a trader at different firms. I was working at a hedge fund, tracking global equities, etc., etc. I was always decent in performance, but very well in risk also. So one thing that I learned from that experience, that you may be the best in stock market, it's not what you make in life, it's what you can retain and take home in life. So I had no mentor that time. My mentors were books, and my mentors were like different people at different this thing. But I learned a lot on my own, that how to get it right.
So, Amit, you are very popular. I don't know if you know that, and I got to know this because after I started, sort of like I was saying in the introduction as well, right? I was asking a lot of my subscribers who they would want me to get on the podcast, and your name kept popping up. And obviously it's because of your performance. So people would want to know how you identify these companies in the portfolio because they would want to do the same. So what is your investment style?
So first things first, when you're looking at a stock, you want to still make it large. You want to have that large returns. A 10% go. So what we did, Sonia, fundamentally, how is our investment philosophy shaped up? From 1994 till 2024, I can tell you for every years we keep tracking what are the stocks that are the largest winners. Every 3 years, 2 years, 1 year, different time frames. And then we keep seeing what are the commonalities in those stocks. Is it growth, market leadership, ROE, reinvestment rates, demergers, change in management, companies who did capex 4x? So we've got frameworks of, we have 20 frameworks which is already disclosed, but we have multiple undisclosed frameworks also. And based on past performance, we find factors of what works. Like I can tell you,
Give me some examples.
changed, like examples of our largest winners this year were Trent and Zomato, which were both part of our portfolio. We made decent money there, and we bought, so loss to profit is a framework that we use, and we bought Zomato the day it turned profitable. I think 310 the results came, 325. I think we had a few million shares in. Like in as in we had we bought a few million shares, and next day we were buying again. So we don't
So
predict.
you didn't buy the Zomato shares when they were loss making. You waited for profitability and then got in.
So Zomato is a bad example because we bought Zomato initially first day, first show also. See, we bought Zomato at 116 rupees a share or 120 rupees of wherever it got listed. And we sold Zomato on the way down when it acquired Blinkit, Kiofit at 124 rupees because we cannot have unlimited losses. So Sonia, I was making one point. My total pre-fees returns for last 6 years is around 700%, probably more than 700%. My top 11 winners by stocks, we have made 223%. My top 11 losers, we've lost only 9%. So fundamentally, we ride our winners and we cut our losers. Whenever we make decisions, there is going to be a point where we're going to be wrong. You have to make sure that you are not holding on your mistakes for a very long time. Capital allocation is everything. You do any business, you do a textile business, if you have bad things piling up, and you're like, basically you have to cut, basically whatever doesn't sell.
You can't be emotional with your.
I do not hold. If like typically our periods are 1 year. Like things we make in wrongs decisions all the time, but we make sure that we don't lose. My largest loss is Nika. We lost 1.2% of our portfolio. But different kinds of firms, but we cut our losers. We don't ride our losers. That is very important in markets. If you want to make it large, we never defend our promoters. See, or what did I tell you at Stab? I have a team of 25 players or 30 players, and 25 I have. If some promoter is not executing, never defend him. Change him.
Get him out.
Get him out. If you perform, see, I don't want to, my analyst, my team knows this thing. I don't care what will happen to a company 5 years from today. I want to know what will happen to this company in next 4, 5, 8 quarters. Basically, I don't have, my investors don't have a 3-year horizon. All my investors are long term. They have a 10-year horizon, but everyone looks at their portfolio at 330.
Okay, so if we are taking this example of Zomato, right?
Yeah.
Since you have investments there, a lot has changed in the last 1 year. Swiggy has come in, now Zepto is going to come in. There's so much competition. There's Blinkit, there's Zepto Cafe, and there's so much happening in this quick commerce space. Do you think it's saturated or is there more to go?
No. Zomato is only at 6,500 crores GMV. There is Blinkit, and Zomato itself will do around 40,000 crores GMV this year. So Zomato. So there are two businesses, right, in Zomato. One is Blinkit, and Blinkit is growing at 25% odd. I think this is start. Flipkart and Amazon do around 1.5 lakh crores. Flipkart and about 1.8 lakh crores. Amazon. So about. And then you have Reliance Retail. So India's retail space, Sonia, is around 60 lakh crores. Blinkit is not even 1% of India's retail space, and it's a habit. My wife orders Blinkit probably 3 times a day.
Same.
And if she orders from Zepto, it's very wasting money. But
And if they say 5 minutes and it comes in 10 minutes, then I'm disappointed. That's how used to it I am.
But like what do you do, and this is a trend, it has disrupted a lot of different. So we want disruptors, we want market leaders and disruptors. Now, can we lose money? Of course we can lose money in Zomato also, but you want to be with the best guys. See, we have 25 guys, we lose money in some, make money in some. The whole game is that when you're making, how large do you make, and when you're losing, how small do you lose? As a loss making, Swiggy does 600 crores of losses. Size is 40% lower than Zomato. Then too, it gets 1 lakh crore market cap. So broadly, mentally, that if things go bad, if there are losses again, etc., things can go bad in Zomato.
But is there enough space? Is the pie big enough and growing enough for everyone to thrive?
See, everyone will not thrive in India. As I said, this Swiggy is losing market share from Zomato. See, we track market share. This quarter also, if you see, Swiggy's growth is 28%. Same quarter, Zomato is growing at around 68%. So, like Shopper Stop used to grow at 4%. Same quarter, Trent would grow at 50%. You want to be with every quarter, you come to know who's the best performing guy in every, like Polycab. A part of our portfolio, we might be seller, buyers, we keep going up and down. So, these are not recommendations at all. But Polycab every quarter used to grow faster than RR Kabil, KEI, Havells. And we rode, like today it's 1.5 lakh crores. We got in early at 10-12,000 crores.
Wow.
And these are monopolies. Again, the best guy in the industry, growing faster, have the highest margin, highest ROC. And we rode it all the way. And now we are cutting weights. Right now it's 3% weight. But we keep decreasing weights.
So where do you see the next disruptor coming from?
The next disruptor will come to know every quarter, like Sting in Varun Beverages. I'll just give you an example. He came with India's entire energy drink market was 1,000 crores. With one player, Red Bull was the market leader. And he had a monopoly in energy drinks. But how many people can afford 100 rupee Sting, 100 rupee Red Bull? Sting came with a 20 rupee product. And there's no number two there. Coke has tried. Everyone has tried and failed. And this guy has created on 18,000 crores, 14%, broadly 2,500 crores of revenues in no time with very high margins. So basically, we keep looking at players and we want, see this quarter, last quarter also, Varun Beverage is still growing at 25%. When HUL was growing at 2%, 3%, Nestle is growing at 8%. You want in every industry the best performing guy. Look at Varun Beverage. The returns of Varun Beverage is, you can't beat Varun Beverage.
Phenomenal, yeah.
And it was reinvesting 100% of cash flows at 26% ROCs. Like DMart. How did we buy Trent? We sold our DMart to get into Trent. DMart FMCG company used to grow at 35%. If you're getting 30%, 35% kind of growth in an FMCG company, where HUL and all this, that time you would grow at 7%, 8%. And at broadly 6 months ahead, same valuation, because DMart would be at 80p, 90p, and HUL would be at 70p. So if you go 6 months ahead, then both are like same P, because your growth is faster. And we bought DMart from 600 till the time growth rate of DMart was more than 20%. We were part of with DMart. But when the growth rate went below 20%, we sold our DMart position. So at around 42, 4,300, like I don't remember exactly, but that point we sold our DMart position, and we got, that was I think in last March. And we got into Trent at 1,200 because Trent started scaling very fast. Because Trent was adding.
You think the story on Trent is done, or is there more to go?
See, that we'll come to know this quarter. Last quarter growth was 39%. So we've got frameworks of selling also. So I said there are 4 decisions. What to buy, when to buy, how much to buy, when to sell. We've already cut our weights in Trent. Trent used to be 8% of our portfolio. Right now, it's around 4.5-5% of our portfolio. But because last quarter was a disappointment, the growth fell from 56% to 39%.
But that's also because overall consumer growth has fallen, right?
Yeah, but when there is a deceleration of growth, market looks both absolute and relative. And there are other opportunities, right, which are there. My dressing room is also basic. My dressing room is
You tell me the stocks in your dressing room. I don't want to know the main players who are batting right now.
See, dressing room, if you think about it, there are so many players. I don't want to name them because we actually built now 3-4 digit 3-digit size positions in every new stock that we are adding. We bought right now, but a monopoly in lab. No, we bought lab made. It was there on the block deal, so that's why I'm saying it. So we bought a lab made diamond certification company like IGI. We bought first day for sure. Hopefully it grows at 30% plus, because 65% of global market share of lab made diamonds. So in India, broadly, I tell you, in lab made diamonds also, what you want is a large TAM, large total addressable market, and a player. See, in every industry, few players will become the entire profit. This happens in every mature industry. You want to do the same in a new industry. If you get it right, you make a lot of money. If you get it wrong, you lose some money and move out. But you've got 25 players. Some players you'll make money and some players you'll lose money. But lab made diamond, it's a new industry. No one knows exactly how large this industry will get. But I've told my wife that no more, after 1 year of me trying to convince her, she now finally agreed that she will not buy diamonds. I said, buy gold, don't buy diamonds. Please buy only lab made diamonds. But now I am seeing that trend. I go to a lot of places. Now girls are now ready to buy lab made diamonds. They also started understanding that it's a waste of time. They can rather give money to me than buying.
I agree. I agree.
But
I've never been a fan of diamonds. They just have no resale values. There's no point.
I'm Sindhi, just think about it. I have my wife and my mom, so Sindhis are very blinky. But coming back, this was a certification company. There are only two in the world: GIA, who didn't enter the lab made diamond category, and the world does. So IGI is around 65% market share of lab made diamond certificates. In the world, there are 3.3 crore carats of diamonds that get sold. 3.3 crore carats of diamonds get sold every year. About 65 lakh diamonds is right now. Number of carats, 65 lakh carats is the size of lab made diamond. About 60% of American market has already 65%, 70% of American market has already shifted to lab made. But the same has not happened in India. It's only 1% penetration right now. If India lab made penetration rises, IGI is a free cash flow machine, and we bought it at around 20,000 crores market cap.
And what is it today?
It is at 25,000 crores. In the last 2 weeks only it got listed. So we bought first day first. We bought at 505. We bought about 3 million shares. We have 4 million right now, but whatever, we might be sellers, buyers.
But you're saying that the runway is large.
I think the runway is large, but we can upsize and downsize positions all the time. So I'm not saying we may be sellers today also. Who knows?
Yeah.
We have multiple models at play, but I'm just giving an example what you want is a global play, like monopoly, and then you want high growth, like lab made diamond for last 3 years for them, certification growing at 60%. And certification business, you're getting $20 for every certificate. What is the big deal in certify? Your PAT margins, their revenues are 850 crores and their PAT will be probably 440 crores this year. PAT after taxes.
Wow.
So this is or 430.
It's a no-brainer.
So not no-brainer, I cannot say that, but all I'm saying is you want monopolies. When you build a portfolio, you're building the best team. If lab made diamond does well, if QSR does well, I know Blinkit will or Zomato will do well. If wires and cables for power sector, I had one guy but different stocks have had different kind of, like PG we sold out at 250. We got it at 250, we sold out at 620. But sometimes mistakes happen in your selling frameworks also. But the whole thing is that you're continuously learning. See, Policy Bazaar is also up after we sold. We sold at 1800. We were selling in multiple times. So whenever you're making decisions, you're thinking risk reward and making decisions. Not all your decisions go right, but you're just trying to build a process. Like whenever someone comes with a QIP, that's one of our selling rules.
Really?
Yeah, that why is most QIPs are followed by underperformance. Most.
Okay.
And if the
That's like a red flag.
That's a red flag. So we've got selling frameworks also.
Okay.
Like buying is a framework. How much?
So give me 4 or 5 red flags when you're picking a company. I'm asking because a lot of retail investors watch our shows. So, they would be doing direct stocks as well. What are 3 or 4 things that if it happens, you stay away from?
Oh, first thing is what we stay away
Any
from
corporate
while buying.
governance issues?
Yeah, corporate governance, of course. See, if I fundamentally think that most people should, like retail has a massive advantage if you're ready to work as hard as your fund manager is, or like if you're going to work 2 hours a day or 3 hours a week and all this kind, I think it's fundamentally tougher to beat someone who's been working 12 hours a day, 14 hours a day and continuously and creating frameworks, tracking. It's very tough. So you need, this is what I can be wrong, but I say that you should do your own investing. You'll beat me also. Nothing that I cannot be beating or something like that. But For that, you'll have to work hard. And if you are willing to put that kind of hard work, you'll have to work 8 hours will not do anything. If you're going to work 40 hours a week, then it'll be very mediocre in life. You have to work extremely hard and you'll beat every fund manager. I think retail, any investor who's doing own money at a smaller scale, if you give me 100 crores today or 50 crores today, I think I would do better than what I'm doing at a 4,000 crore plus portfolio. Of course, right? Because I can come in, get out, like my speed of trading, I will treat markets as inventory turnover. I can make 30% 5 times, 4 times. Then, it's very different than what you're doing at size. At size, you cannot turn your inventory.
Correct. So you told me that when you started off, you lost a lot of money in 2008. You became bankrupt, and that taught you a lot.
Then I didn't have money only, but it was very small size money. Yeah.
So then you learned from that how to manage risk and all of that. What else have you learned in your journey which you use now to kind of build your portfolio?
Sonia, every year I think I'm a smart guy. Like last year, if you would have asked me, like today also I think I'm very smart. But last 31st December.
Your fund is up 50% and the benchmark is up 20%. You have to be smart for that.
No, but I'm giving you like every year you should think that last year I was such a fool and now I'm a smart guy. Till the time, like I don't know how to explain you that every year in 2020 I thought I'm a smart guy. But in 2021 I would think that, oh no, now I'm a smart guy. In 2020 I was a dumb guy. Till the time, and every year, 2022 I would say, oh, I was a dumb guy in 2021. And now I think that last year I was a dumb guy. Now I've become smarter. So the thing is, smart is relative and it will keep changing every year. There is no thing as absolute smart, and we are all learners of the market. We need to continuously learn from the market, and every year will teach you in different, and we make mistakes also. This year also we would have made mistakes. We have made mistakes. I know what mistakes we've made, and we are trying to get better. It's a journey of getting better in risk management, security selection, sector selection, how to size, and you should feel dumb at the end of, like, you should feel that last year I was a dumb guy. If you're not feeling that, that means this year you've not learned anything.
Anything new, yeah.
You have to feel that I was a dumb guy 1 year ago. So this is what I think. This happened to me all the time.
And this is a very interesting time, right? Because we've not had a large correction since 2020. You think 2025 is the year when we're going to have a big, deep correction in the market?
See, I don't predict so much markets. I'm only predicting my players, like just increasing, decreasing my players. But even if there's a correction, you have to be, like last quarter, the markets were down around 8% and we were up, I think, around 5% this quarter. So our alphas were around, this is net of fees. So our alphas were 13% last quarter also. But I don't think that so much. If you think what markets will do, all these pundits who are thinking next 2% Nifty will go up. If it goes down, what can you do? I fundamentally think that if you can compound capital at 20%, in 12.5 years, your money goes up 10x. I'm saying 20 or 25% or whatever, you can use an Excel.
But what do you do in a bear market? Like, if this is a bear market,
no, you have to make your portfolio a better portfolio. You want high earnings growth. You still want players who will deliver in a bear market. You check any bear market, companies who have delivered, they have done. See, even if you lose money in a bear market and you're with executors, 1 year you will be down 10-20%. Next year will be up 100%.
So how do you decide that stop loss? So suppose I buy Trent and now because it's a bear market, Trent falls about 20%. At what point do I decide, okay, now I need to cut my loss?
I track execution and decide. If I have a better fashion player, then I'll move to the better fashion player. I have not taken any promise that I will make money only for Trent. I don't care. From which stock?
No loyalty.
No loyalty. Zero loyalty. I have no promise. I have never met Noel Tata in my life. I've never met Dipender Goyal in my life. I've never met, let's say, Rahul Bhatia of Indigo in my life. I've never met all these guys. So I don't have any loyalty towards any promoter. If they are performing well, they'll be part of my portfolio. It's a public market, right? And my promoters, for a fact, know that if we have come in, that means you're the best performing guy. And till the time you're best performing, we are with you. If you are not performing, what do we do? My clients are also, see, no customer is loyal to you forever. For no fund. And if any fund manager thinks that a customer is loyal to him, he's wrong. We've seen that time and again. My customers are loyal over long periods of time to performance. And I have to perform. So my loyalty lies only with my customers, and we have to perform. And we have Stallion Asset has creating alpha in its name. So our tagline, like, as creating alpha.
So you can't not create.
It's our tagline. We're just following our tagline. What do we do?
So you started trading when you were 14, 15, you said, and today you're what, 35 years
Yeah.
old. So 20 years you've been doing this.
Yeah.
What's the biggest lesson that you've learned in your 20-year journey?
No, manage your risk. If you cannot manage your risk, you'll be out of the game. So if and capital allocation is everything in life, in markets. So as long as you manage your risk, you'll be very rich. I think you'll be very rich.
Tell me more. Manage your risk means what?
You need to know when to cut your positions. As I said, my on a fund level, we've done think risk first, and we think risk all the time. If every morning I wake up, I go for a 40-minute, 30-minute walk. Though I've gained a lot of weight, but I still go out there to walk. I keep thinking, what is the risk which I need to protect? What mistakes I've done? It's all about thinking that where have you gone wrong? Risk can come from anywhere, and there will be bullets that you can't. Like COVID, we couldn't see. Of course, COVID, our drawdowns were way lower than the benchmark. We did extremely well in COVID. But I think risk comes from cutting losers. That is one thing. But also first should be security selection is also very important. You need to know that which securities to bet on. Riding onto our winners is also very good. So I would say it's all about capital allocation. It's not just risk, because a risk of not having high weights in your winners is also a risk. Like the way I look at it, that if you don't make it large and if you've got a winner and you don't size up, I don't get sleep also in the night if I don't size up. If I sometimes, we just buy like a small 100 shares example. I'm not 100, but you know what I mean, like just small position. But till the time I don't get the 1,000 shares or whatever I want, I feel very nervous. Ki everyone will come to know what what I know, and if everyone comes to know the stock will go up 50%, I will.
Your life seems very stressful to me right now.
You see, our fund managers have to think through, and they have to make decisions. We get paid to make. If I made 30 decisions and I divide my revenue divide by decisions, how much I get paid for every decision. If I'm getting paid the amounts that I do, hopefully I should make good decisions. And there are frameworks to decision making. I am not lying. 95% of our decisions are made out of frameworks of what to buy, when to buy, how much to buy, when to sell. And it's like a process and a system. It's like version 1 we've made, and then we keep trying to get that. Can we get better?
Perfect it.
And then 1 year later, we have a version 2. And then 1 year, then we try that. Can we get better in this version? And we have a version 3. So it is so difficult to just replicate us, because what we are today or what we were 3 years before today is not the same me. And what I will be 3 years from today, because it's all about self-learning. It's about continuous learning and learning compounding. Like you have to, from your networks to your, everything compounds, and you have to be this is a very high learning game. You
Correct.
cannot, it's a, like you cannot say that I'm going to learn little, I'm going to read. See, like, I'll be honest, when I was young, and now I don't read so much, but when I was young, I used to read a book a week. Continuously, whatever happened, I used to read a book a week. So if someone has to, example, beat us.
You are still young, by the way. Just
Young, but younger than 20, yeah, younger. But, if someone has to beat us, then they will have to outwork us. If you work 8 hours a week or a day, they will not be able to beat us, because we are working extremely hard. I work half Sundays, sometimes I don't work Sundays. You have to get that, like anyone who wants to beat us. It'll either be AI, because their productivity is very high and my productivity is not that high, or they will have to outwork us. There is no other way.
So how many hours a week do you work?
No, I would be working a lot. I start my day at 7:45. I leave from home, and I reach home at 8:39. Like 8:30 is where I leave office, to be honest. And yeah, around, yeah, but even when I'm at home, it's not like I'm not seeing sometimes.
You're always clued in.
Yeah, I'm always. It's very tough, at least for, and people say work-life balance and all that. It's great. But for us, it's very tough. Like for me, I cannot be glued off. And people say that I don't see the stocks for 5 days, 7 days. I don't understand that part. I have to see the stocks every 15 minutes max. So
Really?
I see my stocks every 15 minutes.
Your own portfolio?
My own portfolio.
Okay.
And my track list, like what is happening. I need to have a hang of What did this say that
But
that's a
don't you
trick?
think that's counterproductive? Because sometimes you go for months without seeing the stock. They've gone up and down, but they're in the same place that they were 6 months
No,
ago.
so therefore, in our case, there is so much money coming in also
Yeah.
every day. There is sometimes money going out also. So we have to think through that. What is the
So
kind
your
of
clients' portfolios, basically.
yeah, clients. My own portfolio is my own fund.
Okay.
So my own portfolio, whatever money, small money that we make, we invest majority. I mean, 90% plus, I would say, would be
Back
invest
in
in
the
the fund only.
Okay.
So my money, I can tell my clients one thing, that we will be in the same boat as them. So, and some people invest, 5% of their net worth, 10%. Mine would be very close to 100% of our
Your skin is fully in the game.
skin, body, hair, everything. Skin is an understatement. So we see, if you can compound capital at decent rates, and I'm a young guy, at least for next 35 years. I'm 35 right now, but next 35 years, hopefully, we should do a decent job of compounding.
So what do you mean when you say decent job? What kind of returns are you expecting from your
I
from
can't
the
say
market?
this.
No, not from your fund, from the market over the next, say, I'm asking you
10,
because there are a lot
11%.
of young investors who have not seen a bear market, and B, think that it's very easy to make money in the stock markets. What is your advice to them?
3% about 10-year bond yield is what typically most global markets deliver. So our 10-year bond yield is around 7%. So about 9 to 10% is something that should be a reasonable expectation for a ETF kind of investment for most people.
So we were talking about how to navigate bear markets, right? You were saying that cut your losers, back your winners. But how do you decide in terms of sectors? Which are the sectors that could lead? Which are the sectors you should stay away from?
So COVID, we cut positions across financials, and we went very large in pharma. We want the next 4 quarter earnings. Banks were going through a moratorium. Who in the world has seen a moratorium? Banks were also down 30-40%. Pharma companies at first point of the bear market, everything is down 20%. I say ghada ghoda sab girta hai. And that is where you have a chance to change your portfolio and say, like Trent. I'll give you an example. We bought Trent at 600. It went to 800. It came down to probably at 500 or something. I don't even remember what price. We sold off our Trent because Trent, we understood that these retail stores will not open for such a long time.
Oh, this was in COVID.
Yeah, we had Trent positions before COVID also. We sold our Trent, bought some pharma company. We made a fortune in labs and all that. We made
And then you bought Trent back.
and then we bought Trent again. So it's like a cricket team that he went to the dressing room. And my front runners that time in COVID time, I don't remember, but I think by May, June, we were making new lifetime highs. So COVID, we were doing well. We were making lifetime highs so fast. And we don't, see, we need a change. We don't panic, my job is to make money. It's simple. Whatever happens, I have to make money. And we don't panic in cutting weights because we are following a process. It's a complete process. And it's a process which is based on execution.
So, okay. So, there are processes in place. There is risk management.
Sorry,
in
Sonia.
place. Yeah,
In
go
a
ahead.
bear market, it is okay to lose your capital. Don't lose your confidence. Because what typically happens is a lot of people, and including myself, we panic, we freeze, we don't trade. Whatever happens in a bear market, it's very okay and very normal to lose your capital. Do not lose your confidence. If you lose your confidence, it'll take a very long time for you to come back. Sorry.
No, that's some really good advice, because that's what people lose first, right? Their confidence
And they
because of
freeze.
fear.
Yeah, they freeze. A trade. Whatever happens, at least small amounts, if you keep trading, you'll get a hang of you're with the market or you're not with the market. Like very small amounts also. Like this is what I'm telling you what works for me. It may not work for growth investing doesn't work for everyone, but it works for me. And it has got hyper momentum also. I'm not saying growth investing is the best style. Some say value works for me, but I don't have the patience for value. So like if someone tells me a stock will go up 5% year 1, year 2 it will go up 5%, year 3 it will go up 200%. I'm guaranteeing you, I know my patience level is so low. At end of year 1, I will sell it off. Or worst, I'll sell it off at end of year 2 because I know that
A trader mentality will always remain trader mentality.
because I cannot hold stock for 2 years and no performance. I will panic and sell. And some bad news comes. I know my personality is not, doing, of course, we look at value. For us, growth, we find value in growth. And we understand every investment style very well. But we think that if you want to do hyper compounding, then this style is like the best style, or with low beta and low standard deviation. So you look at every factor, right? Large gap. As I said, my risk on every factor is still the lowest. So my goal is not just highest returns; it's still lowest risk and highest return.
So give me one sector where you think in the next 5 years,
Anything with to do with consumer and technology. If you do only technology, you'll be rich. Look at what is happening in the US market. Today, US is 65%.
technology, what you mean, IT stocks?
Not your large tech services companies. Every quarter, there'll be at least two new listings that will happen in consumer technology companies.
Okay.
And look at every consumer technology company. I think those are the guys that'll make it very.
Like, give me examples.
From your beauty consumer technology companies to everything, just keep tracking across the board that who is winning customers. A business cannot win without customers, and it's a journey that businesses go through. And who was winning customers? Tell me one. Like, page industry was doing well, it was growing at 40%. Everyone knew that jockey is doing well.
Correct.
It's not like it was happening in secret. Bajaj Finance was doing well. You had to go to one electronic store to know that, boss, customers will love this product. You go to Eicher Motor, you got to go to one showroom of Eicher Motor. It every quarter for I think 5 years, Eicher Motor was showing 40% growth.
Correct.
So growth is very secular. Market share gains are very secular. And once you have a good product and that scale is happening in front of you, you have to ride it. See, sometimes you'll go wrong also. It's okay to go wrong. In markets, there should be no problem in going wrong. We are in the business of making mistakes. But we find good companies, market leaders, and scale should keep happening in front of us every quarter. We don't want like cyclicals. We don't do B2G, like government companies. We don't do B2B so much. We don't do like consumer facing. That is where you'll have the lowest drawdowns. Even if HUL is growing at 0%, just giving an example, your drawdown is not 50%. But if a government stock grows for 0% for one quarter, you'll see a 50% drawdown. So ROC, high ROC is very highly correlated to low drawdowns, and high growth is very highly correlated to good returns. So you want the best of, basically, I want the best of everything. I want good initial. See, how do you be best performing? If you want to be the best, then you want to, try to at least try,
But how do you manage your stress? Because I mean, I'm sure it's very stressful to manage so many people's money.
Yeah,
I can see you have your whoop on. That's
this is what tracks my stress, and I've bought a Whoop, and my stress levels are less than 3 minutes a day, and I've been wearing this for last 3, 4, 5 months only because I saw Virat Kohli wearing it and Cristiano Ronaldo. No advertisement, of course. Whoop has given me no money whatsoever, but I have.
You have only 3 minutes of stress a day.
That is my average. Like, it's not like some days it's 10
What
minutes
3 minutes of the day is that?
when I'm chilling with my wife. So that is the only times, that is market, touch wood. See, we build processes, and we are in the business of building processes. For decision making has to be a process. It cannot be random that today in the morning I don't like this. I'm thinking all the time, not what I'm going to do of a particular stock. I'm thinking, can I design a better process? Like, there's a difference in both. Can we have, what mistakes are we making? I'm looking at a high level. My thinking doesn't go in what I'm going to do with the stock. That we have a lot of frameworks for it. It's automated kind of thing. But it is that, can I build a better version 5 of my framework, or version 6? Or what are new things? What are new money? Where are things that someone else made money? See, I keep comparing myself to the best performer, not just in India, in the world also. And I keep seeing that what he did better, and what are the factors that if I can get his portfolio, I'll get his portfolio and just try to understand what was he doing better than what I was doing. Like, across now, first we used to do it only in India. Very honestly, now we were not getting benchmarks. So we started doing, globally we started looking at how do people do better than us? Like, how can you do better compound? If you see one of the most popular guys in the world, he's done 29.6% compounding. That is Peter Lynch for 14 years. You have to dream to do better than the 29.6% that
Any
is the,
mentors that you have? You said you didn't have any.
no, earlier, no. My books are my mentors. I've learned a lot from books, but from people also I learn a lot. I learn from my mistakes a lot. But
So, what are your favorite books in the market books?
my market books, I think my market leadership framework came a lot from Zero to One by Peter Thiel. I started thinking in terms of monopolies and singularities. Looking at, so it starts with an idea and then I go deeper, deeper, deeper. Then I loved what on risk management. I initially learned it from Jesse Livermore. On thinking and frameworks, I learned it from Peter Lynch. I'm just telling you basic books, but like but these are books which initially, because you start with basic books and then you go deeper, deeper, deeper in every category. There's a book about valuation by in McKinsey. It's like measuring value, I think it's called. And this is one book that I go once every year to understand my entire frameworks of how value gets created, how much cash you generate, how much you reinvest into the ROIC at which you reinvest minus cost of capital into competitive advantage period comes from this McKinsey's book on value. So different categories gave me different initial starting ideas. Like influence, I learned a lot about how to speak, how to influence people, because I'm an entrepreneur also, and you are influencing people all the time. I learned that from Robert Cialdini of how to influence people. There's so many books which have, but there are some books which gives you frameworks. I learn business now. The way I look at business, I learn from only one guy, Naval Ravikant. So that guy, I fundamentally think that he's the smartest guys out there, and he understands leverage. He understands how businesses are built. Because see, I started my business with 1.5 lakh rupees. So I'm not someone, but you don't need money to make businesses. You need, I would say,
You need an idea.
you need an idea and then hard work and execution and yeah, a lot of other things, but not money. I didn't. Like I was seeing interviews of. Mahindra, he was saying that you need 30 crores or 40 crores to start a business. I was like, okay, I started.
Kumaramanglam Birla.
Birla, sorry. You need 30 crores to start a business. I was like, okay, I've got there. Now I can start a business. But of course, you don't need, I don't think you don't need money. You need some kind of expertise. But see, Naval Ravikant, I think I learned a lot. But different topics, Sonia, from different people. There's not like one topic, one mentor. Bharat Bhai of ASK, I think is one of the best investors that I have met, have come across. I don't know any other investor better than him. Like he's a very, very sharp person that I think, yeah. So he's a very sharp person. Like he's someone who's fundamentally learned, his understanding of Indian markets are very high. So I learned, but different funds, yeah, different people, I learned different things. I learned from traders, I learned from investors, I learned from my dealers also, of how every day I'm trying to learn that one thing. Today I'm with Sonia, I'm trying to learn what should I learn from Sonia. So,
no, but that's an amazing quality to have, to try learn every single day. Not too many people, openly talk about it, and I think everyone is, especially in the markets, right? The market is your biggest teacher.
yeah, your mistakes, like see my PNL, that's my biggest learner. To be honest, if you have a PNL account, you'll keep thinking on terms of PNL, how to expand that PNL. But it's a very good, it's a fun thing. You have to get excited. I think excitement is one thing and optimism.
I want to also understand from you what your psychology of money is, because you've gained money, then you lost money at a very early age, and now you're making money for other people as well. What is your relationship with money, and how has it changed over the last 10, 15 years?
So nothing has changed, I don't think a lot of things have changed. Of course, you start wearing different watches, different alcohol brands, all that changes. But fundamentally, this is what I shouldn't even say this, but I spent less than 1 or 2% of what I make, and I reinvest about 95% of what. So I keep making sure that whatever I'm making, only 5% is what I spent, and then the rest I keep reinvesting. So I don't know who I'm doing this for. It's probably my son Aryavir, but but I cannot spend, like I cannot go 15% or 20%.
Why is that?
I don't know, yeah, because I don't know why I can't spend, but I need to start learning that of how to spend like 30%.
Is it because you lost a lot of money initially?
No, nothing like that. Nothing. I've forgotten also. I don't even remember. Only in this podcast I remember that I lost money. I don't remember what I lost last week, to be honest. So how
That's a good thing, though.
So we keep losing money all the time, making money all. Last year we would have made north of like 4-digit plus in crores. But we don't think, like, when it's done, like my returns also, it's only in such con calls or podcasts you remember. All you're thinking is the next
The next idea.
next trade. You forget. Like, I at least don't even think that. I don't even remember that what was last year's returns. On 1st January, those returns are done. No one will see if your past performance has zero correlation to what your customers will do in future. So I have to be very customer. I'm an entrepreneur. I have to be very customer focused, and my customers want decent returns, reasonable risk, and great communication. And that is what the whole idea is. How do I get better in my returns, my risk, and my communication with my customer? That's all I think. That's all I have to do. That's it.
Okay, that's amazing. Okay, so just a final few questions before we let you go. I mean, it's been really fun talking to you and learning from you and your journey. There are a lot of young people watching, like I was saying, and if you had to give them one piece of advice, what would it be?
No, keep working hard. Keep working extremely hard. You need to be a hyperscaler. You need to dream extremely big. I won't lie, when we were a research company, so we didn't start off as a PMS. I had no money to start off as a PMS. We started off as a research company. We had a 125 square feet office. And we used to just focus on creating value for our customers. In our research business, over time, we had 3,000 customers. And I was only 28, 29 when I applied for my PMS license. It was in 2018 is where we got the license. In 2000, I'm born in 1989. So I was 19, I was 29 when I got my PMS license. Today we are at around 4,000 crores plus. God's been super kind, super humble. But today we are dreaming even big. We are thinking one step ahead. That now example. I'm an entrepreneur also. I think my PMS profit pool is 900 crores. I'm not very happy with 900 crores profit pool. I'm thinking bigger, that how do I move to that $1.2 billion profit pool with mutual funds have? Not now, after 3, 4, 5 years. But, you have to keep thinking in scale, leverage, keep learning. But you have to dream big. India gives you that opportunity. Be extremely ethical in your business dealings, and do business with good people. That's all we do. We are, but dream big. Like, if you dream small, see, we go wrong 100 times. My dream, I'm not lying, Sonia. I left my job to only make 15-20 lakh rupees, because that was my goal. When I made 20 lakh rupees, I wanted to make 1 crore rupees. The day, in fact, my head of business, his goal was that if he does the first, he was young. We were in 2015, 16, I'm speaking about. If he made 15,000 rupees a day, he will go home. That was, so
In his trade.
So he used to sell research services.
Okay,
so one
okay.
client was like 15,000. So we came from places which is unimaginable. And when we started PMS, my benchmark, the two guys that we had benchmarked, one had 150 crores AUM, one had 200 crores AUM. And these are very popular guys, come on CNBC, etc. My benchmark was like, God, please make me reach the 200 crore AUM. That is all I wanted in life. And when I reached 200, I was like, nahi yaar, someone else has 500. I changed my benchmark. And then once I became 500, I said, nahi yaar, I'm dreaming too small. So, the more you reach your goals will change. You don't start, like, at least I never thought, now I'm at, like, we started the year at probably 1,100 or 1,500 crores. My goal was not to reach 4,300 crores, whatever we have today. The goals were smaller, but we focused on customers. Like, customers, we always thought that customers should be like the one who should be winning. There we didn't dream small. There we were always dreaming bigger. If we did 50% alpha, uh, we used to manifest that we'll do 50% alphas. This year also we've got massive large alpha targets. I don't know if we'll achieve or not, but dream big, and then work extremely hard to execute your dream, because how much ever you dream, you have to execute and work extremely hard. Yeah, you have to work hard. No, nothing happens in life without working hard. Good set of people, everything will follow if you're working hard. If you're not working hard, who's gonna follow you? So if you're, like, everyone looks up to you when you're building companies also. Everyone looks up to you, and if you're working 14 hours, they'll work 12 hours or 10 hours. They will not work 6 hours. So if you're working 8, 10 hours, like, I think this way. I can be horribly wrong, because I don't know how the other side of the world, thinks. But this is what has worked for me.
It's worked for you, and
It has
I'm
worked
sure
for
it
me. I'm
has
just
worked
telling
for
you
all
what
of your
has worked for me.
shareholders also.
Nah,
All of your
share
investors,
their own-
all of your investors, yeah.
like my customers.
Your clients, yeah.
So, but yes, it's worked extremely well for us. But focus on the customers and read Jeff Bezos' letters. Anyone who wants to learn businesses, the best, and if you want to learn entrepreneurship, Jeff Bezos' letters of how he scaled from nothing, and he's given everything about people, processes, technology, leverage, how large businesses get created. Uh, you learn a lot. See, Sonia, God's been so kind for us that think about it. Who do we go to speak about businesses? The billionaires. A billionaire is telling me how he's going to do business. Who are my clients? They are also the super rich. They are telling me what they are doing in, their businesses. So we get a lot of understanding.
A lot of insights, yeah.
And insights. And we keep looking at the levels of, that greed. And we also keep learning that, array, this is a way of doing business. This is a way of managing. And that's how I learn.
Okay, Amit, it was really a pleasure speaking to you. Thank you. Thank you so much for joining us on the podcast and wish you all the very best.
Thank you so much, Sonia, for inviting me. Thank you, everyone, for watching. Thank you. So, of course, Sonia, stocks are not recommendations. We are a PMS. We are buying, selling all the time, every day. Today, we would be buying, selling a lot of stocks. This is just for educational purposes. I'm not an advisor. I'm just a portfolio management company who's trying to make money for our clients. But these are not recommendations at all.